When trading with the trend, it certainly makes hanging on to a trade much easier than trying to fight the trend. Unfortunately, some people take this too far. They'll take a position to the extreme, hanging on to a position as the market goes against them. The first mistake they make is moving their stop loss, believing that the market will eventually behave correctly, or at least the way it should. The worst thing that can happen at this point is that the market moves farther against them than they thought it would, and then they're proven right. In other words, they're rewarded for being very stubborn. Unfortunately, there does come a point where things change. And this is one reason that stop losses are to be honored and never moved. For example, I have the US dollar Canadian dollar pair, and you can see during the 2008, late 2008, we had surged massively higher. And this is a weekly chart, so keep that in mind. This has been going on for several days, 20 days in a row or something that we rallied. So if you were long of this market up in this area, you would be forgiven to expect bullish pressure. And perhaps you would put a stop loss below the 1.20 level, which would make sense. It was a previous high. It's a large round number. A lot of different reasons why you may do so. However, once the market moved against you, you need to let the stop loss do its job and protect your trading capital. Because if you don't, you can see how far we fell. At this point, we had fallen about 27 handles. It's very difficult to imagine a trading account being able to take that kind of bashing, and most of the traders who would have traded this way during this time frame probably lost their entire account. And this is all based on the fear of being proven wrong, or taking this small hit. You will have losses, but you have to have the psychological wherewithal to accept those losses. So for example, in this move here, once we broke down, that tells you that, something isn't right and you need to look for a reset, another opportunity. Until you get that, it's really difficult to get any type of thing going on longer term in your market, because you're essentially paying for information. Sometimes you're proven wrong, but that tells you where the market is going. And by trading with the move, then you do quite well. But you can see that being stubborn here would have just been catastrophic as the market just continued to go much lower.